Hello, Mavericks. Happy Labor Day weekend. This is Rob Reinhold. This is the Trading Room. In this session, we're going to be going through the news of the week. We're going to talk about what happened. We're going to update our sector scoring system. And then we've got some trades for you.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Before we get started, I am happy to announce the 12th annual Maverick Fantasy Football League. Okay, now look, if you are not interested in fantasy football, just either fast forward this or tune out. Give me 30 seconds here. For people that are interested in it, we do this every single year. We do this and college basketball March Madness, and it's just really fun. If you would like to participate this year, we're going to be sending out an email here probably on Friday with invitations to it. There's going to be 5 leagues. Choose one of those 5 leagues and sign up. We will be using Yahoo Sports for this year, and there will be all the information in that email. So again, this is always a fun thing we like to do as a firm together. Okay, let's jump into the markets. What happened last week? Well, look, it's late August. It was the last week in August. I am always happy when this week comes and goes. Not that I don't like summer, but August trading is always fairly boring. And it's not always true, but seasonality says that we usually have a little bit less volatility, but a little bit less movement. And it's usually like this slow grind higher, which we've seen this year. We saw this week we had a down day on Tuesday. We had a down day on Monday. Tuesday, Wednesday, Thursday were all up days, and they were all new highs. And then on Friday, we had a little bit of a sell-off. So not a big deal, but I got to say there's a little bit of weakness under the surface. I've been talking about that for the last 2 weeks, talking about how the Mag 7 AI stocks are actually pretty weak here. A little bit of news this week. We got news that Trump tried to fire Governor Hill, I believe. I can't remember the last name. That is challenging the independence of the Fed. This is just going to go to a lawsuit. We probably won't hear about this again for another 6 months would be my guess. But we did see some weakening in the dollar and a little bit of lower bond yields. And then we saw a big sell-off in crypto. Crypto has been positively correlated with the stock markets until about 2 weeks ago, which means that it's really correlated to the AI really hot stocks at the moment. So we're seeing that weakness underneath. If you've been playing those names, it's been tough the last 2 weeks if you've been long. If you haven't been playing those names, you haven't even noticed any weakness whatsoever because the market is super strong. On the economic news last week, we had new home sales better than expected, durable goods orders better than expected, manufacturing index better than expected, consumer confidence better than expected. So for all my perma bears out there that I've been really trying to get you on the rally train here, this is the proof that, okay, the economy is doing better than you think. We got second quarter GDP revised higher. It was at 3.1%. The revision came in at 3.3%. And then what I thought the big news of the week here was this Core PCE price index. This is the Fed's favorite inflation indicator, and it came out as expected, but a little hot. That's why we got the sell-off on Friday. And last week I said there were 2 things that I was watching: the PCE index and the first payroll report in September, which we're going to get this Friday. These 2 numbers, if they come out bad, then I think we're going to have a rough, bumpy September. We will see, but this first PCE price index, it wasn't terrible, but it definitely wasn't great, and you saw the market sell off on Friday. So by the end of the week, the markets basically were flat. As I said, we had 3 up days in the middle of the week, and then we gave it pretty much all back on Friday. You can see basically flat. Gold trading to new all-time highs. That's having a nice move there, mostly from the fear of higher inflation down the road. Let's take a look at the charts. And you can see that nothing really changed. We had, a run to new highs, pull back. We had a run to new highs. And here we are. We're probably starting the next little pullback. Now, typically, you like to see it break out a lot higher above the last resistance. So when it comes down, it's got somewhere to bounce. I think we're probably going to come down to the 20-day moving average, would be my guess. But really, anywhere in here, I think you've got to be looking for a bounce. I know we want to be bearish. Sorry, I shouldn't say we. I know I want to be bearish. I love bear markets. But this is just where we are. We cannot call a bear market or become bearish until we see it in the technicals, and we just haven't seen anything here. So the S&P, look, we might get another couple of days of selling. I don't see any reason why it doesn't bounce after that. Moving on to the Qs, though, we got a little bit of a different story. Rally, pull back, which was still fine technically. We got this rally. Look, this is only one candle, and we have no idea what's going to happen next week. But if we break below this last low, that's trouble. That is trouble technically. This is what I'm going to be watching. Do the Qs. Can the Qs pull back, find this 50-day moving average right around where there is support level, and have a meaningful bounce that takes us back to highs? If that doesn't happen, I think you really got to watch out for September. As you can see, I still think we have a week or two of price action to watch and see what's going to happen in September. So for now, I really like just being fairly neutral. And that's where I'm going to be. That's where I am. That's where I'm going to stay. I'm not really looking to be a hero here until I get a little bit more information here. As you can see here, a lot of the big names had decent weeks, except for NVIDIA with their earnings report, which we didn't even talk about NVIDIA earnings. It was pretty good, but it wasn't stellar. And the stock is priced to only go up if their stellar earnings. Gave a little bit back, 2%, which is absolutely nothing. So what are we looking for next week? Bullish. It's just that simple. And look, I could say all these things. I could use words and tell you all the things that are in my brain, but guess what? None of that matters. It's a bull market. Stay bullish until it's over. Period. Now, I've been warning about this for the last 3 weeks. It is here. We are at the point of time where there have been the most sell-offs in the stock market, the most corrections, and the worst 6 weeks, September 1st to October 15th. It did not happen last year. Last year was a bullish period, but the 2 years before it, yes, we saw 10% pullbacks. I think you need to be worried. Now, that being said, worry is something that's internal in your brain. And I remember as a young trader, I couldn't separate out my bias, my feelings, my worry from the charts. Now, as a trader, I can still have all these worries. I can still have all these fears, but I can still be bullish. And that's what you need to do. You need to stay bullish until the market tells you not to be bullish, period. Regardless of your fears, regardless of your worries, regardless of this seasonality cliff, regardless. However, remember, you control your outlay of capital. So instead of being 100% allocated, maybe you're 70% allocated, maybe you're 50% allocated. You can control that. You can just control the volume of it. And I think this is where you pull that back. You still be long, you still be bullish, but I think you dial back your capital exposure. Monday, the markets will be closed for Labor Day. I'm sure you probably already knew that, but just want to make sure. Next week, first week of the month, we get ISMs. So ISM manufacturing on Monday and that's on Tuesday because of the holiday. And then we get ISM services on Thursday. And then this is the big report. Take a look at that. 74,000 jobs is what they expect. That's a fairly low number. If it's lower than that, it's going to be trouble. If it's above 100K, the market's going to breathe a sigh of relief. Over 100K tells the Fed, employment's okay. You can cut rates. If it is negative or below 74,000, the market's going to worry that the economy is starting to soften too much. So this really needs to be a Goldilocks number. Not too hot, not too cold. That's where it needs to be. for this market to really go ahead and rally throughout the rest of the fall. We're at a +3. Like I said, no feelings, no biases, no anything. That's just where we are. So we have to stay bullish. We've got to stay over allocated to the bulls. All right, let's take a look at sectors. Most everything was flat, but I really wanted to point out a few outperformance. Financials look great. Financials is, in my opinion, the best looking sector at the moment. This is the second week of big gains in energy. The problem is this didn't come with big gains in oil prices. Oil prices actually have not gone up over the last 2 weeks. So I'm not going to buy into the 2 weeks of energy rally. I think this probably fades off or just halts a little bit. What underperformed? Utilities. Wild underperformance from utilities and consumer staples. Defensive sector, it moved down as well. Everything else, fairly flat. Let's take a look at our sectors. Utilities was a +2 last week. We're downgrading it to a 0. So utilities no longer one of the bullish sectors that we follow. However, communication services, look at these candles. Remember, Monday was a down day. Communication services, it was an up day. Friday was a down day. Communication services, it was a green candle. It was still a down day, but it was a green candle, meaning a gap down, and people bought it. These are wonderful, wonderful candles. I don't see any reason why we don't see more bullishness out of communication services. So that's going from a +2 to a +3. Looks great. Next up, healthcare. Healthcare was at a 0. We're going to stay at a 0 until we get some movement in these moving averages. But not bad price action. Not bad price action. We had this rally, and then we've just gone sideways here. If I had to be bullish or bearish, I'd be mildly bullish here on healthcare. Sorry, that was real estate. This is healthcare. My bad. So that was real estate. This is healthcare. Healthcare had a bigger rally. And you can see, it based. These aren't the best candles. They definitely don't look as good as communication services. So we're just going to go to a +2 on this one. It was a +1. We go to a +2. In industrials, this was the sector I was really worried about, and I downgraded pretty heavily a couple of weeks ago. And I said, guys, it's just not bouncing back. The rest of the market was running to new highs, and this just wasn't. And then last week, we got this little candle on Friday. Okay, I said, let's not chase that. And you can see it just fizzled. Just fizzled out. I still think industrials is something you don't really want to be in at the moment. I don't think the strength is there, but you definitely don't want to be short this sector either. Look at financials. Look at these candles. This is what I'm talking about. Okay, Monday was a down day along with the market. Look at that. Friday's candle was an up day. People were buying financials on Friday, even though the market was down significantly. Sorry, it goes to a +3. +3 on financials. All right, this is consumer discretionary. What's there not to like about it? Yeah, we had a down move on Friday, but beautiful, beautiful chart, +3. Here we have consumer staples. We went to a +1 last week because it was showing a little bit of strength. But you can see, boy, we just dropped. This is back down to a 0. We're going to keep this as 0 until those moving averages start to give us a trend. Technology. All right. Just on our scoring system, it is below the 50, above the 20. These are flat. So we are just going to go to a 0 on this. But just like we looked at the Qs, this failure to make a new swing high here, it's fine. It can hang out in this area. But if it breaks below this, then that is absolutely a trend change, and we will go bearish on technology. But right now, it is a 0. Materials upgraded from a +1 to a +2. Beautiful, beautiful price action here this week, up for the week. And then energy, look, I'm reluctant on energy, but you have to go to a +2 on it. That is the score. Again, I'm not going to be buying into this rally aggressively. Beautiful candles. Clearly, the money's going there. But there is this correlation between oil and gas prices and energy. And if you see one rally without the other, it's a little bit of at least a warning sign to say, hey, you know what? This may not be durable. This little rally may not last. watch out for it. So here's where we were last week. What got a downgrade is utilities and staples got downgraded. Financials got upgraded to a +3. Materials and energy go up to a +2. Financials, consumer, comm, services. That's where the strength is. Materials, I like. Healthcare, I like. Energy, not so much. Is there anything I want to short right now? No. But if I had to short, I would actually be shorting tech. And not just tech, but the really volatile tech that's been weak lately. Last week, we had 2 trades roll off, just 2, one in financials. So we had a JP Morgan bullish trade that went to max gain. We had an Affirm bullish trade in technology that also went to a max gain. So not a lot of trades rolling off, but a nice finish to the week. We are at a +3, which means here are the slots that we have available. Remember, the great thing about a system like this is that there is still some discretion. So I can have as many of these slots as I want. I can have as many trades as I want up to the amount of slots I have available. This is protecting me from becoming too bearish. One of my traps that I would fall into is that when I started to feel like the market was overbought and oversold, I started to take preemptive bears. And what happened was the rally kept going and I got hurt. If I force myself to follow this, which I now do, I cannot take any more than 3 bearish trades, and 2 of them are pretty wimpy bears. I literally have handcuffed myself to not make the mistakes I used to, that I'm dedicated to following the system. Once we get down into -2, like +2, +1, and 0, once the market deteriorates, then I can all of a sudden go and get more allocations. So if this market goes all the way down to a +1, now I can have 4 bearish trades. And then if it goes to a 0, now I can take 5 bearish trades. But right now, I am prohibited from taking overly bearish trades because the market score has not changed yet. I am also in charge of how much allocation I do. I could fill up all of these slots. I don't want to. I don't love the market here. I don't like the signals it's sending. I still think it's bullish, but I think there's enough reason to be worried. So I'm just going to pick my 2 favorite sectors on the long side, comm services and financials. I'm going to do some wimpy bulls on there, and then I'm going to do a -1, the most bearish I can do in technology. So let's go ahead and take a look at some of those trades in those sectors. In comm services, came across Live Nation. As a young trader, there's no way in hell that I would ever be able to trade a stock that ran like this, based for 5 days, and then kept going, and then based for another 5 days. I would say this has gone too much, it's gone too far, I don't believe it, it's got to have a pullback, I'll be patient. How many times have you used all those terms? And it just kept going. So now I love these kind of trades. Here's a great thing. I'm not looking to be super bullish. I'm looking for a +1 trade, which means I just need to put a trade on that where it won't go down and I'll make money. So that is the trade, the September 12th, 160, 165. So this is the spread. The price is already above 165. As long as it closes above 165 on September 12th, I get a max gain. I looked at the options on this. It's going to cost about $350. So you're going to get a $150 profit and a $350 loss if it ends up below 160. This is a high percentage trade that's all theta, meaning I don't need any delta to make my money. I just need it to not go against me. That's Live Nation. In financials, this is the sector I like the most. We had a trade on JP Morgan last week that looked great. Ended up max gain. The strength is in these big multinational banks. And here is Citigroup. I know Citigroup has been in a high base for about 2 months now. And every time it backs off, and then we broke out of this. This is one of my favorite patterns here. When you break out, but it's a very wimpy breakout. It's a very wimpy breakout. And a lot of people look at this and say, oh, you know what? It's going to sink right back down. It might. But most of the time, what I see out of these is that we spent a lot of energy these last 4 to 5 days breaking out. And it just got a little tired. what happens a lot of times, they just hang out just right up in here. They just hang out for a couple days, maybe a week or two before moving higher. And again, I like this sector. I want to be bullish. I'm willing to give us some time. So for me, I'm looking at this saying, you know what? I'm just going to do the 96, 98. I'm going to do it for 3 weeks. I just need this thing to float up above 50 or above 98 in those 3 weeks of time. All right, and I wanted to do a bear in tech. So I looked at the worst performers and I found the stock that did not have any rally whatsoever as the market was rallying. And this is C3AI's AI company. You can see had bad earnings, had a little bounce off that. But after that little bounce, sold off, and we have just been basing. As you could see, there is no buying coming into this. No buying whatsoever. If the market was more bearish, this thing's like, if we were in a -2 situation, I'd be playing this down to like 14 or even 12. But this thing looks pathetic. However, since we are at a +3 and I only have a -1 slot, this is the trade. This is a trade. It is the 1750, 1650. I'm basically thinking it's going to be below 1650 by September 12th. So that's the trade. If you want to be a little bit more bearish, go to September 19th. And I think you can go all the way down to 15, 1715. I think it's easily can get there, especially if the market tips over a bit and gets a little bit of a sell-off. Let's wrap this up. I think the first 4 days of this week are pretty boring. I think they look like the last week where we just crept higher a little bit or had little sell-offs or tight ranges. I think that's probably what the next 4 days are going to look like until Friday. And then on Friday, we're going to get that jobs report. And I think that Friday, I think I'll be able to say, hey, you know what? I'm really worried about September. I think we get that tumble. Or, hey, you know what? Things are looking good. Bull market is still in place. Let's go ahead and remain bullish. Until then, work on your fantasy football teams. The draft is set for Tuesday night. So again, we'll send out an email this weekend with an invitation. We'll send out another one next week to pick up any stragglers. And then once the draft is made on Tuesday, you have to wait an entire year until you can join next year. Thanks for joining me. Have a great Labor Day weekend, everybody. Stay safe out there. Goodbye.